With global growth momentum slowly picking up and emerging markets more so driving demand for commodities, for raw materials, we have Africa's mining sector back front and center, and international companies fast on the lookout for opportunities to leverage off here. What's your sense of the kind of activity we're seeing at the moment?
Well, compared to about 18 months ago when, as you know, commodity prices were at an all-time low, we've seen a significant increase in exploration activity. Projects that were previously shelved because of the low commodity prices, not making projects viable, coming back on stream. So the people with the drilling companies are fast and furious, going out there and recommencing projects. And then again, on the M&A activity, we're seeing a lot of M&A activity where buyers and sellers of projects that previously couldn't agree on a price for their projects are now starting to come to the table and start talking. So we're seeing a significant upturn in that sphere as well.
Of course, these are players that don't come in blindly into a market. You know, the risk-reward characteristic is placed under extreme scrutiny. Where are the concerns centered for the most part? And I know we're talking very broad strokes here, but if we had to generalize.
Well, I think first and foremost, if you're looking at mining activity, you know, it takes quite a long time for a mining project to come online, and investors are taking decisions that could last them 30 years into the future. So one of the key components, I think, when looking at a project and its viability is legislation. And I think in South Africa, there's been a lot of uncertainty in the last few years on legislation, but positive strides have been made. The lifting of the moratorium on the prospecting licenses just before the Easter break was a huge positive. The statement by the DMR that the online system, the application for mineral rights is now has been launched. The outcomes and findings from their audits that they performed during the moratorium has been largely positive. So these are all things that are working in the right direction to encourage
in the right direction. But you know, one would assume that there's got to be some caution about with the kind of rhetoric we're hearing around nationalization, given, for example, what's played out in Zimbabwe and how that could translate into a player like South Africa.
Absolutely. I mean, I think nationalisation is first on the tip of the tongues of anybody in the mining industry. It's a far bigger challenge than getting your mining right approved or complying with environmental legislation even. That is causing huge uncertainty, and obviously that decreases investors' appetite for the risk. But I think the key thing is that the government has started now with public forums and engaging with other stakeholders other than just the Chamber of Mine and mining companies, and recognising that there are other stakeholders to play and engaging with them. So I think that is a positive.
To what extent does discussion like this or debate like this you know, open up these companies to looking at issues like beneficiation a little bit more seriously than they've done in the past, you know, because that's the actual merit, or that's exactly what government is after ultimately.
Absolutely. I mean, last year when the Royalty Act was implemented, one of the key motivators for beneficiation was reducing the royalty tax payable on beneficiated minerals. And that will encourage companies to beneficiate. It doesn't help that you ship off the ore off to China and then it comes back in batteries that cost 10 times more. So obviously beneficiation is key to the process. Yeah.
Is there a shift in perception amongst investors as you see it in terms of the degree of protectionism, because we know that, you know, first and foremost, whenever any tax laws get introduced, protectionism streams out loud. Is there more of an understanding as to why governments are possibly now going down the route that they are, and looking at a more, you know, compatible relationship with government moving forward?
I think there is, Isha. I mean, really, at the end of the day, all the stakeholders have to work together for a positive outcome, and I think just engaging with everybody and the main players, especially when it comes to tax legislation. You know, mining companies pump millions, billions into the economy in terms of wages as well as into tax payments, and that, you know, the government doesn't carry any risk in investing in mining companies, and it earns the revenue anyway. So I think looking at the nationalisation and protectionism side needs to be looked at very carefully.
Of course, beyond policy and legislation, we've also just got to consider the environment in which these businesses are going to be operating. So let's look at the basics, like the cost of doing business, where you've got power constraints and power costs rising as a result, labour regulation as well, and earnings on that front. How are companies, or learning to navigate in these environments?
I think as an advisory firm, what we're seeing at BDO is that more and more companies are engaging local advisors on the ground to assist them with the regulation. We recently formed the Africa Desk, and on that forum, we're seeing a lot of companies coming to us and asking them to assist with their structure, to assist with getting work permits, assisting them with their Reserve Bank approvals. So they are starting to recognize that it doesn't matter how big you are, you still need the local knowledge on the ground, and they are engaging local expertise to assist them on that front.